Next time you're trading a pattern, please make sure all the outer lines of your pattern are blue. I get the question a lot, and how do you know if you're trading a pattern on the right time frame? And the answer to that and why it's so important is coming up next. If all the lines that make up your pattern are blue, then you're in the right time frame. If any of them are white, you actually need to go down a step and go to a different time frame until they all turn blue. This is going to have a profound impact on how you manage your trades, and we're going to talk about that in just a second. See, this is a consistent way of making sure that you're on the right time frame for the pattern that you're observing. And of course, you're not going to get consistent results unless you're going to be acting consistently. So why are these lines blue or white, and what exactly do they mean? Let's take a step back for a sec. The time frame has everything to do with time, okay? Nothing to do with price. So when you're looking at the XABCD patterns, you're measuring both price and time. The ratios are measuring how far your retracement go is measuring price. See, if I was to draw a pattern, I'm moving my mouse up and down in the direction to form the pattern. Time, on the other hand, is when you slide your mouse over to the right and the pointer goes over that way. Now we're looking at time. I think we all know where we're going with this, right? So is that going far enough? That's your question. Are you moving the mouse over far enough? Is enough time being incorporated into that pattern? And that's what we need to know. So how do you know if you've gone over the minimum amount of time required? Well, that's when the lines turn color. So outer anchor lines go from being white to being blue. Now, of course, if you used our tool before, you'll know that everything is configurable, so you can change these colors, maybe use a different theme, maybe use a different skin. Either way, those lines, anchor lines, will change color. You want to make sure that by the default settings that line is going to be turning blue, so that you know you have enough time built into the pattern, or else you know you're on the wrong time frame. So let's look at an example. Okay, we have this US yen, it's a 15-minute. I totally understand that this pattern's worked out, but let's forget about that and pretend that we didn't know what happened with it. Okay, is this the right time frame to be trading this pattern on? Okay, you should be looking at this chart and seeing white and going, no, we need to go down a time frame. So let's go to a 5-minute. Let's see how it looks there. Okay, so now we have the pattern, and do we see any white anchor legs? Okay, no, that's right, and because they are blue, so we have enough time built into it. You get it? It's not that hard, right? Just make sure that all your patterns have blue anchor legs so that you know you've met the minimum time ratios. Otherwise, you know you're on the wrong time frame, and the solution is to go down a time frame. So why does it matter? Okay, trade management. The smaller the time frame, the faster you will be at reducing your risk, locking in targets, and basically moving your orders around to your execution plan. That is because you see more detail, and the more candlesticks you see, the quicker you're going to react. Some patterns require you to react quicker. Making sure you're on the right time frame will enable you to do so. So just remember, when using patterns, remember time, okay? The importance of time in keeping those anchor legs blue. If you haven't yet, you can download our news tool, which you see here, as well as our price line indicator. They're free indicators that we have. More than willing to give them to you. Head to our website, grab them there. If you have any questions, put them in the comments below. We'll be happy to help you out. Otherwise, we'll see you in the next video.